Build wealth with debt. Power of real estate. The major fortunes in America have been made on land. If you are not good with the tech, real estate is the only thing that can make you a billionaire. Let's see how. In today's video, I will guide you in detail about all the what, when, why, and hows of getting rich with debt in real estate. Alright, let's dive straight into the financial toolbox that's going to help us build our real estate empire. Debt. Before you start squirming in your seat at the mere mention of the word debt, let me assure you we're not talking about the kind of debt that leaves you with a debt avalanche. No, we're venturing into the world of savvy financial leveraging that real estate offers. Imagine you've got a solid investment opportunity on your radar, a property that has all the markings of future profitability. But here's the twist. You don't have to drain your bank account to make it happen. This is where the magic of leveraging debt comes into play. By securing a mortgage, you're essentially tapping into OPM, other people's money. You're borrowing funds to make an investment that has the potential to appreciate over time, all while your initial investment is a fraction of the property's total value. It's like you have a financial sidekick that multiplies your buying power and potential returns. Good debt versus bad debt. Good debt is your trusty sidekick. It's the debt used to acquire assets that can appreciate or generate income over time. In our case, real estate. Bad debt, on the other hand, is the kind that drags you down. Think of those high-interest credit card debts that you accumulated during a shopping spree. The key distinction is whether the debt you're taking on is likely to put money in your pocket, good debt, or take money out, bad debt. When we're talking real estate, we're stepping into the realm of good debt, where your investment has the potential to grow and earn. Financing real estate investments. Now that you have a know-how, let's talk about how the real estate game is financed. It's a delicate dance between debt and equity. When you find a property that aligns perfectly with your investment goals, you put down a portion of the property's value as your own equity. Then you secure a mortgage to cover the rest. This blend of your equity and borrowed funds becomes the engine that powers your investment. The idea is that as the property's value appreciates and generates rental income, if it's a rental property, your equity grows and your debt remains relatively fixed, leading to potential profits that far outweigh the initial investment. Amplifying investment returns. By securing a mortgage, you're essentially multiplying the potential returns on your investment. Even though you're only putting down a fraction of the property's value up front, you're still entitled to the appreciation on the property's full value. So when the property's price skyrockets, your return on investment soars, and that's the kind of mathematical magic we all love. Cash flow and long-term wealth creation. Leveraging debt isn't just about waiting around for property values to rise. It's about creating a steady stream of cash flow that keeps on giving. Imagine owning a rental property. The rental income you receive can help cover your mortgage payments, and if you've planned things right, even leave you with some extra in your pocket. Over time, as your tenants contribute to your mortgage payments, you're inching closer to owning a valuable asset outright. This is the recipe for long-term wealth, building equity while generating income. OPM and real estate. OPM, other people's money. In real estate, it's like having your financial cake and eating it too. By leveraging debt, you're tapping into the resources of lenders, be it bankers or investors, to fund your property purchase. You're using their money to potentially generate wealth for yourself. This isn't just savvy financial management. It's the cornerstone of real estate investing. Your investment potential expands exponentially when you harness OPM to make it happen. Factors to consider when using debt for real estate. The power of planning and due diligence. Interest rates, loan terms, and market conditions. Will your strategy work? Leveraging debt isn't a shotgun approach. It's a calculated, strategic move. Before you ink any deals, you've got to do your homework. Investigate the property thoroughly, understand the market trends, and assess potential risks. You're not just buying a property. You're investing in your financial future. So plan, and then plan some more. You also have to have the insights of the market, such as interest rates, loan terms, market conditions. Be vigilant. Keep an eye on trends, understand compliances and terms, and stay attuned to market shifts. Knowledge here is truly power. And design your strategy accordingly. Strategies for building wealth with debt in real estate, rental properties, fix and flips, Commercial real estate. Remember, every strategy offers its own unique potential for wealth creation, and the key lies in aligning your choice with your financial goals, risk tolerance, and expertise. These are some popular ones. Rental properties. It is indeed the golden ticket of real estate. Rental properties are like planting seeds that grow into money trees over time. By getting some financial muscle from leveraging debt, you're diving into the world of property appreciation and a steady rental income flow. You use that rental income to tackle your mortgage payments while you're slowly building up equity and watching that property value go up, up, up. But here's the scoop. Being a landlord isn't all sunshine and rainbows. You've got to roll up your sleeves for property management and deal with the ins and outs of tenant relationships. Advantages. We're talking a smooth, consistent cash flow thanks to rental income. Get ready for the long-term game, as property values tend to play the appreciation card. Oh, and don't forget those tax benefits. Deductible expenses are your new best friend. Challenges. Being a landlord ain't for the faint of heart. It takes time and effort to manage that property. Tenant stuff can be a roller coaster. Turnovers and property hiccups might happen. Brace yourself for market roller coasters too. Real estate markets can be as unpredictable as a weather forecast. Fix and flip. Imagine you've got a house that needs a little TLC. That's where the fix and flip game comes into play. You buy a property that's begging for a makeover, work your magic to give it a glow up, and then cash out by selling it for a profit. Leveraging debt here is like your secret weapon. It helps you snag that property and fund the renovations. If you've got your game face on, you could be looking at some sweet ROI. But let's be real, this isn't a game of Monopoly. You need a knack for spotting promising properties, a good sense of how much renovations will cost, and some project management chops. Advantages. Patience? Not needed. Profits can roll in relatively quickly. Get your hands dirty and learn a ton about property improvements and the market. And if you play your cards right, those profits? Let's just say they could be higher than you'd expect. Challenges. Renovation might play hard to get. Costs and timelines can sometimes do the cha-cha. Hold on to your hats because market ups and downs can mess with your selling price. Buckle up. Buckle up, as you'll need capital and some renovation know-how to get into this game. Commercial real estate. Now let's crank it up a notch with commercial real estate. We're talking about a whole new level of opportunity. This strategy involves snagging properties like office spaces, retail spots, or even industrial complexes and renting them out for some juicy income. These properties can shower you with higher rental yields, but hang tight, they also bring along more complexity and risks. It's like stepping into the big leagues, so be prepared. Advantages. Get ready to cha-ching with higher rental income from these commercial properties. Dip your toes into the diversification pool. Multiple tenants can smooth out any vacancy bumps. And keep your eyes peeled, because well-located commercial spots can appreciate big time. Challenges. Tenants and their lease agreements can be a puzzle, complex and intricate. Brace yourself for market moods. Economic downturns can hit commercial demand. This isn't a penny drop game. You'll need a beefier wallet and a knack for commercial real estate. Knowing these practices is not enough. Hopping into the world of debt with benefits is not that easy. The properly done homework is needed. Getting started. Knowledge is key. Before diving in, educate yourself on property values, market trends, and the basics of real estate. Be a savvy investor, not a rookie. Network like a pro. Connect with experts, agents, investors, and managers. Their insights are pure gold and can lead you to great deals. Plan, plan, plan. Craft a solid financial plan. Define goals. Budget for property and renovations, and factor in mortgage payments. It's your roadmap. Debt, but responsible. Leverage debt within your limits. Calculate risks. Assess your budget realistically. And remember, it's a marathon. Mind the fine print. Read loan terms and agreements. Understanding interest rates and fees protects you from surprises. Property hunt takes time. Scout neighborhoods. Visit properties. Be patient and discerning. The right investment is worth the hunt. Learn from all angles. Expect hiccups. Learn from them. Study both your own mistakes and those of experienced investors. Each lesson counts. Conclusion. So there you have it, champions of the real estate arena. Your journey begins with a strong foundation. Educate yourself, network with the pros, and map out a solid plan. Leverage debt as your strategic ally, but always with a responsible hand on the reins. Real estate isn't just about bricks and mortar, it's about building your financial future brick by brick. Call to action. Got burning questions or exciting stories to share? Drop them in the comments below. Let's share all the knowledge and build a community of savvy investors where we all make money together. Like, comment, subscribe, and remember, your future financial success starts with that first step.